Okay. Hello, everyone. Welcome to our presentation about a study case regarding all Star Real Estate Group. Briefly, we are going to talk about some recommendations about 4 points, principal points. One is related with an incremental analysis that we did regarding to the proposals or leasing a building or leasing busy place. The second point is about assess through NPV method of the proposal to buy or rent a large bus. The third point is about analyze and provide some recommendations about the marketing strategy of the company. And lastly, we are going to talk about some important suggestions about the budgetary analysis in this case. So this business report will begin with the incremental analysis that is an important tool to analyze two alternatives that the company all star have. And we evaluate two alternative A, alternative B. These are the data about revenues, cost penalization, in what case that you was in the alternative A, new place adjustment, annual rent, annual public services and others, marketing expense, transport expense, and total annual cost. And my partner, Erica, will explain more deeply about this data that we analyze through incremental analysis method.
Hello, everyone. My name is Erica. After analyzing the data from the All-Star real estate case, we take the decision to go for the second alternative, the alternative B, and I will explain why. How we can see in the last tables that my partner explained, according with all the data, the net income is highest at in the first alternative, the alternative A, than the alternative B. On the other hand, it's important to consider in the first option, we should spend more in the marketing than the alternative B. And also we will get less new customs than the other. In the alternative B, we should the company should have the 5,000 new customers, and in the other use will increase 50% the customers. This is important to record. Try to explain about the incremental cost. We have all other incremental costs like the transport expense. If we move to the other place, the busy place, we should buy a new bus. The transport expense is a little increase because in the first alternative we don't need a new bus, but we need a new annual public services, a new place adjustment, other costs like the cost penalization, for end the contract in this building. If we can compare the table that my partner mentioned in the first slide, we can watch exactly which points are relevant in this part. According with all the data, the total annual cost in the alternative A is more than the alternative B, and this is the reason why we decide go for the second alternative, the alternative B, and take the same place and use rent the BC place for a new courses. Now, my partner we will explain about the other analysis. Thank you.
Hello everyone, my name is Reva and I'll be talking about the net present value for the company All-Star. So financial metrics like net present value assess how profitable an investment or business endeavor is. It recognizes that a sum of money's current value exceeds its value in the future because of its potential for earning, and it takes into account the time value of money theory. So for the expansion options discussed in the All-Star Real Estate Group case, we are looking at this table. So option A is for the McBain Towers and option B represents data for the BC location. As we can see, the initial investment for option A is $450,000, whereas for option B it is $206,000. Likewise, we calculated the NPV for both the cases, and can you go on the next slide, please? Yeah. So the time value of money is incorporated into the NPV computation, and an optimistic net present value indicates that the money invested is anticipated to yield higher return than the needed rate. Thus, as we can see from the table that for option B, it is there is a more higher positive number. Hence, All-Star Real Estate should go for BC location. Now my friend Diana will be speaking on the marketing strategies.
Thank you so much. Okay, the company request us that they need some suggestion or recommendations about the marketing strategy. So there are two alternatives or proposals that have the company, and one is promote an investment bridge or promote a living bridge into Vancouver. But it's important to take into account that BC government announced that it's possible that will apply some regulations regarding the growth of the companies in the real estate industry. Yeah, is a regulation regarding the growth. And these possible changes and uncertainty affect the sector. So it's important that the marketing strategy give some activities or some actions related with this possible regulation that is coming in the future. So we recommend that the company focus their strategy in promote an investment bridge, not promote a living bridge in Vancouver. It's important that the company encourage and leverage an investment bridge and work very strongly in brand positioning, and what it means, or it is called brand awareness. The company should make some activities surround digital campaigns, customer loyalty, and campaigns open to the public, because it's important that the company acquire or obtain more customers, and not only the existing customers, instead of acquiring more customers for the business and can offer its services. Okay, so that's it about the marketing strategy. So is the turn for my partner about budgetary analysis. Thank you. Right there, your microphone.
Sorry about that. Okay, my name is Raidir, and today I will tell about the intricacies of our company, All Star Company, about revenues and expenses budget for the upcoming period. So let's break down the key components and considerations in this time. Our focus on the analysis of revenues is projecting into the future with a 3% budget increase, despite stable demand kept on 2,420 customers. We anticipate growth fueled by 3.5% of inflation, adjusted, of course, in the increased sales per unit as per of the Bank of Canada December 2023 data. About the revenue projection in 2023, where total sales amount to between 22 millions and 28, with a selling price per unit about 9,100. Looking ahead to 2024, with this 3% budget boost projects, total sales could reach approximately 25 millions. About the expense breakdown, examining our budget allocation, we see the consistent percentage for most expenses relative to sales. And highlight, can you give me the other? Thank you. About the percentage of most expenses relative to sales, highlighting the stability in the operational efficiency. Salaries, rent, marketing, and other expenses exhibits in a proportional balance. We can see here the rent expense, the marketing expense, the interest, the supplies, and other expenses, and of course, our net profit of 5 million approximately. The next slide, please. Thank you. In our rent expense consideration, in the scenario of an overall 3% budget increase, our rent expense is a marginal one uptick, while this warrants attention, the consequential profit and profit margin growth of this concern indicate the manageable impact. About the about the recommendations, we can make a performance metrics and adhere to budget in order to assess employees and also oversee spending plans and reach financial objectives, and also take into account pay increases in light of performance that have been shown within the budget increase in a range of 3 and 5%, which is assumed based on increase in prices, an increase in minimum wage over the last few years in Canada. This is all of our presentation. Thank you.